So it's currently 7:46 in the morning, and it's Saturday, the day after the end of the week. So it was a week four, with a little Friday, first day of March. So we had a not a bridge week like I usually mention, but we had the first day of March on the last week of February. So if I go down into the daily chart, it's possible to see that this last day of the week that ended the week for candlestick for February uh, was coupled with this Friday 1st of March of 2024. And this 1st of March of 2024 was uh, a different day than the usual, because if I go into my news, it's right here, weekly forecast, we can see that this Friday does not have the 8:30 NFP, and the NFP for March is going to was delayed to the next week on 8th, yeah, on the Sunday 8th of March. So it was delayed, and it was not because a lot of times when this happens, NFP is going to be in the same day. So if Friday is day one or day two, and it comes from a breach or the previous week, then they will usually it's first Friday. So first Friday there's an FP, and they don't care about delaying an FP to the really first week one of the month. But instead, I can see that week one was delayed. The NFP was delayed not for the week one, for the real week one, and this breach slash week four of February didn't add the NFP candlestick, the NFP Friday that it usually has, because they usually don't change. If it's the first Friday, I don't care if it's in the bridge week or in the week one, they will just put it on the first Friday. In this case, the first Friday was this bridge, not really a bridge, but a bridge with not comas, but what it's called, bridge with these things right here. Let me see. Quotation marks. Okay. So, fuck. What is this? Okay. So, like I was saying, it's a bridge week with quotation marks because it's not really a bridge week. But going into the week, what can I say? We had Monday, no news. So Monday is more likely to be a consolidation candlestick and accumulation candlestick than an expansion, because usually sometimes Monday expands. And that's possibly to be seen. There are days and weeks, especially, that Monday, the first day of the week, expands, and then we have uh, Tuesday reversal or retracement. But in this case, we had Monday, no news, which indicates us that consolidation is more likely than an expansion. This is followed by Tuesday's Westy news at 8:30 and 10, followed by Wednesday red news, 8:30 again, and on Thursday we had Euro all day news, followed by 8:30 Westy. Then on Friday, which was the 1st of March, we didn't have an FP, like I mentioned, but we had uh, some red news at 10 o'clock. So I'm going to read what I thought that was going to happen. So my bias, my forecast for this week. I now make a lot of things on paper because I think it's easier for me to be more focused instead of being me in the charts writing a lot. So I prefer taking my notes sometimes in a sheet of paper, in a journal, because I have a digital journal for some trades, a journal for my tape reading, a journal for the forecasts, and for what I think that it is likely to happen. So I mentioned the news events, and then I mentioned the bias and weekly forecast, where I said price on week 3 slash previous week traded into a premium of the first half of Q1 before making the high of the week on Thursday and trading lower on EU. Uh, that same thing did not happen on the XY, where it remained on a premium from the first half of Q1. What do I mean by this? So if I grab, let's grab a fibs for the sake. So start of the year, Q1 starting, end of Q1, right here. We can see that this is the Q1 time range. So Q1 open, Q1 close, Q1 midpoint, and price traded into a premium, as you can see. On the week 3, because I'm also going to do this PM session, so this afternoon for me I'm going to do the February recap. But just a little point, what I was mentioning is that price traded into a premium, a currently premium on week 3, price traded into a premium of the current Q1 dealing range. So after the opening, where the price immediately trade on upside on second half, and we can also divide alphas on alphas. That's the whole idea how segments are created, because they all are divided. They are like perfect numbers that divided on itself. So you can divide it 24, 12, 6, 3, 1.5, then 9, which is 90. Yeah, 90. Then 90 divides 45, then again an half. So that's the whole idea. It's dividing numbers in perfect halves. That's why 5, 15, 1, 3, 4, 8, 12 are all perfect numbers in some sense. That's why it's used for time-based charts. But the idea is that on week 3 price traded higher into the premium, making this high of the week on past week. And then that did not happen on the XY. So on the XY, if I go to the daily chart again, and if I do the same exact thing, I can even copy, if I'm not wrong, this to this. Yep. No, it was wrongly placed. So first day, last day. Yep. First day, last day on the XY, and if I place my fibs from the Q1 low to the current Q1 high, I can see that the price didn't reach a premium. Let's reach a discount like it did on EU. On EU, price traded into this premium, so it traded to opposing uh, end of the range, and here price stayed at a premium instead of going to a discount, showing some type of divergence, meaning that possibly, and this is a possibility, the XY can trade higher and then resume lower, whereas the EU is going immediately to continue on the downside. That's a possibility. Or also, we can see price doing the opposite on the XY, showing this as a market structure shift, which I really don't believe that's going to happen, because of my experience and because out of the I view this as a market structure shift, as a breakout and not as a continuation on the upside, and that's possible to happen. On the XY, I can see these 3 up-close candles right here, which can be used as an order block if indeed the price breaks lower and continues on downside. But here now on consolidation territories on 50/50s, so we need to wait to see what algorithm, what price does next to better position myself on the charts. But that was mainly the whole idea. The idea is that the XY was in a discount of the current Q1 range, and EU was on a premium, while EU was at a premium of the current Q1 range after making this high of the week. But then I mentioned that on week 1 on EU it was the first bullish expansion candlestick ever since the yearly open. Also after expansion only comes a retracement or reversal. So this week I'm looking for lower prices. and that was correct. What I can say is that after this expansion candlestick on week 3, I'm going now to take this off. This was then followed by this week 4 small candlestick, inside candlestick. And as we know, after expansion, only can come to the retracement or a reversal. So because this expansion was created, then we created this possible reversal slash retracement candlestick. Why do I believe that this is a retracement and not a reversal? Because there is no SMT, because I still believe that DXY has possibility to trade on the upside, to trade on downside and upside. We are now 50-50, so we need to wait. And because there was not a clear retracement or reversal, price created a small inside candlestick. It chopped. It was a liquid candlestick. But the idea and the short opportunity was there, trying to catch this high to this low or this low to this high, meaning that even inside candlesticks can be traded, and you can't really expect when they are going to happen. You just know that we have accumulation, manipulation, distribution, but accumulation, expansion, reversal, and now we are likely to consolidate a little bit or retrace to then continue or then the reversal. So the next opportunities for March are either going to be completely reversal, validating this as a potential uh, eye of the second half of Q1, or this can be a retracement to then price continue on the upside for EU, which means that the XY is going to trade lower. An inverse thing would be that this is a reversal, meaning that the EU is going to trade lower now into these lows, meaning that the XY is going to trade higher and reach into this more deeper into this PD array, which is a 6-month premium week consecutive encroachment, which for me I really mentioned that I do not I do not need to see the consequent encroachments completely perfectly being redelivered and rebalanced, but I like to see those at least some pips away, and as you can see, we almost traded there. So that's why I am 50-50, because I can see lower prices and I can see higher prices. I'm not going to buy this breaker because we're at a premium of the current dealing range. We're also a premium of this one, so this is for me is a more indication of shorts, and we are also trading away from this potential expansion, which was uh, order block being formed. So I really believe that if the XY trades lower and potential trades lower, then EU is going to trade higher, and EU is going to validate this inside candlestick as a retracement to then on March continue on the upside. Then I mentioned that we had new week opening gap on the upside. Friday consolidated, which means that Monday is either more consolidation or an expansion. So we had Friday expansion, as you can see. Friday consolidation after this Thursday high of the week on week 3. And this was followed by this Monday expansion candlestick. So it's visible that on Monday price expanded. Even with no news, like I was mentioning, price expanded. So that's why you I think that trading Mondays is not the best thing, because you don't have like the clear idea. Of course, that we have Friday. Oh, sorry. We have Friday indicated that Monday is going to be more. It can expand, and it is likely to do so. But it's a big but. Uh, you are not sure. So I imagine that you buy these low today for Monday, and instead of expanding like you have anticipated, because Friday consolidated, you instead have price ranging and chopping you out. So I think Mondays are like a no day for me, especially because then you can catch the Tuesday retracement or reversal, or then wait for Wednesday expansion, whatever it is. But I think that you need at least Monday to go and to trade. It depends also on your model. If your model works on Monday, perfect. If it doesn't work, doesn't trade it. Do not trade it. But the idea is that Monday is not guaranteed, and we have not, even though that you have past data of the past week Friday, which indicates you what Monday is going to do next. And I mentioned that because if I go into 51 hour, because the past Friday we had only consolidation right here. Then on Monday it was likely to be an expansion, and we saw that expansion pretty much from year to year, 50 pips, which is almost a trending candlestick on the upside, an expansion candlestick on the upside. But then it was followed by this Tuesday reversal, which, whereas in this case on Tuesday it was impossible to trade to these highs. So you can also wait then for Tuesday to then indicate you. So you let Monday pan out. For then Tuesday you find an SMT, a potential turtle soup, because one market is going to reversal with a failure swing, and if a reversal happens, and another is going to reversal with a failure swing. So in this case, EU had the failure swing, GU had the failure swing, not possible to take the Monday high, and EU had turtle soup. And this also happens for retracements. Sometimes retracements are birthed with a turtle soup, and then you can wait and see what's going to happen. But even though that there was a possibility of a lot of money to be made, I had to buy this key level, the perfect low, 10 pip stop loss, and you aim at these highs, like perfect trade, right? It's also not worth it, the risk, because it's not guaranteed. Uh, so now the next point was price on the 1-day chart at EU didn't close above the 1-day order block MT, now trading into the order block bearish order block low. So this was Friday, and on Friday you can see that price was not closing inside of this order block. It closed, then it came back down, and then as we can see it closed below it, right? But what can I see now? Now I can see that instead, okay, I can see that the price indeed traded lower, and then they are followed by the new week opening gap on the upside on the weekly candlestick for this week 4, expanded Tuesday reversal, and then traded lower, not making these highs right here. So a lot of the marketplace is viewing this as a potential uh, pattern, like something like this. I don't know what they are viewing this as, but they are viewing this as equal lows, right? Equal lows, or lows being made at this trend slash resistance diagonal line, and they want to short this into lower prices. And I want to buy those shorts once they reach these levels. That will be a perfect idea for the next week. But focusing on this week, so I mentioned that in EU price traded below the order block, the bearish order block low, closing below it, but this was then easily followed by the new week opening gap with a very like 10 pips maybe, yeah, with 10 pips of a new week opening gap. Not 10 pips because it's if it's measure 15 pips for the previous weekly close to this weekly open, we had 50 pips with a new week opening gap on the upside, which are then followed by the candlestick that I see right here. So now, put in the notebook right here. I'm going to talk a little bit of the week, what happened. How was the potential short opportunity that I mentioned? What was the highest probability move? And if it was uh, not advertised, but if it was admissible and high probability to find a potential trade. So what can I see? The first is that we had a weekly candlestick. Then I also have the weekly recap notes that I already wrote some bullet points, but I'm going to go through and talk about those. I'm just going to grab a drink and I'll be back. So back to the charts, back to the EU inside candlestick, and we can see that on this inside slash accumulation candlestick we have a low of the week and high of the week, because every candlestick has four things. It has an open, it has a close, it has an high, and it has a low. Every single time you can count every candlestick, and what do they all have in common? That they have an opening price, a closing price, which means that they have an opening time and a closing time as well. They have an high and a low. Every single candlestick has a fixed open time and closing time. In this case, if it's 2 week, the fixed opening time is the Sunday 5 p.m. where it opens the weekly candlestick, and that's a fixed opening time. And it has a fixed closing time, which is Friday 5 p.m. So when Friday ends, we have then the end of the week with the price being made at that point, closing the entirely weekly candlestick. It has also not a it has all then the highs and lows are the variables because there is no fixed time for those to be made. It it is not like okay every Tuesday there is an eye of the week at 5 p.m. No, the eye of the day, the eye of the week, and the low of the week are also variable on time and price. So those are things to be mentioned and important to mention. Now on daily candlestick to not be talking and saying a lot of crap. We can see that we have Tuesday. We have the Monday expansion, so we have the weekly open right here. The first, I'm going to highlight the week with a box, so it's easy to follow. But we have the Monday expansion candlestick after a Friday consolidation. So even with no news for this Monday, like I mentioned, no news for Monday, as we can see, only news on Tuesday, Wednesday, Thursday, and Friday. So even with no news for Monday, we had an expansion. What do I mean by an expansion? A trend, a daily candlestick that has a lot of pips in volume. And we can see that we have those 50 pips on the upside from the Monday low to the Monday high. This is then followed by the Tuesday high of the week, creating this reversal after trading above the Monday slash expansion high, which is then followed by lower prices on Wednesday, where Wednesday expanded on downside, making a new low of the week, trading below the Monday weekly low. So the expansion start to expansion end. We had the expansion end taken and reversed as a turtle soup, and then we had price trade back lower into the expansion starting point, which was the Monday low, making a new low of the week on Wednesday, before then creating this discount week and retracing on the upside, closing above the weekly open. This is then followed by the Thursday candlestick, where we have price opening, retracing once more on the upside into a into a premium of the current dealing range from Tuesday high to Wednesday low, and also into a premium of the Tuesday reversal candlestick. As we can see, we had price retrace into a Tuesday reversal candlestick trading above the Wednesday high, and then we had another expansion. So after this expansion on the first half, followed by a retracement on the second half of Wednesday, we had then an expansion on the entire day of Thursday, making the Thursday low of the week trading below the Wednesday retracement low, because as I mentioned, this discount week is simply the first half expanding lower, and then the second half of Wednesday retracing on the upside to close this candlestick. So we are then followed by this Wednesday candlestick, Thursday candlestick trading into this retracement low, making a new low of the week, which is then followed by a trend on the upside on expansion candlestick on the upside on Friday. Now, if I double click my chart, double click, what can I see? I can see an important factor on SMT and on Turtle Soup is that where basically in this case we have the on EU the expansion I retraced and then Turtle Soup to reverse for then the weekly to be reversed. Yeah, I think that's the correct one. So we had the Monday expansion end, which was the Monday I, followed by a retracement, another continuation, and now the second expansion, so retracement, another expansion, made the eye of the week as the reversal and then expanded lower. and in GU that it was not seen. On GU, what was seen was that the Monday, the first expansion of the week, so the Monday uh, expansion start to expansion end, the expansion end was respected on Tuesday as a failure swing, whereas on the Tuesday on EU it was turtle soup. So that's a very important thing to mention because that's how we can measure because that's the cycle that ICT mentions where we have accumulation and accumulation starts everything accumulation expansion. So we have accumulation on Friday, expansion on Monday, and then on expansion only can happens two things, which is a retracement or a reversal. Now if I open and I check my both of my charts, if I do intermarket analysis, I can see that on Tuesday we on EU we had a retracement, so retracement back to expansion, and on GU we had accumulation, expansion, followed by automatically the reversal because the Monday I was respected, the expansion I was respected, whereas on EU the expansion I, so the expansion ending point was retraced, expanded once again, and once again after an expansion, it only can comes another retracement or a reversal. In this case, with the reversal, with the expansion, with the also with the reversal already made on GU for then price to trade lower. So that's an important thing to mention. On the 12-hour chart, we can also see the days as well on halves, meaning that not only is the weekly candlestick in half, because I know that five 12-hour candlesticks makes half of a week. So if I count 1, 2, Monday, 1, 2, Tuesday, 1, Wednesday, this is the first weekly half. So we have 1, 2, 3, 4, 5 12-hour candlesticks dividing the week, and we then have the 1, 2, 3, 4, 5 from Wednesday, second half, which ends the Wednesday candlestick. 1, 2, 1, 2, 3, Thursday, 4, 5, Friday. So of Wednesday, 5 a.m. is when it starts the second half of the week, and it starts also the second half of Wednesday as well. So on Monday, we can see that we have price expanding on the upside. This is then followed by the reversal on Tuesday with this three candle model. So we can see that we have this 5 a.m. 12-hour candlestick. So this morning cycle on Monday was used as a reversal and as a range, with price trade above it on Tuesday on night cycle between 5 p.m. and 5 a.m., which made the eye of the week and the eye of the day for Tuesday. And then on the second half of Tuesday, being from 5 a.m. to 5 p.m., the second half of Tuesday, the morning cycle, the daylight cycle, price expanded lower into the range low, into the 5 a.m. Low, which was then followed by the Tuesday candlestick closing with a small candlestick, and then on Wednesday we have the night cycle, the no daylight cycle. So there's no daylight between 5 p.m. and 5 a.m. Price expanded on the downside, making the weekly low. And this was the best idea for this week, in my opinion. It was catching this short, which was also in confluence with the weekly candlestick, and we could have a very good 3-hour trade if looking at the lows, and an 8-hour trade looking at to make a new weekly low, trading below the Monday low. Of course, that it's not that easy. In hindsight, everything is easy, but when the stakes are high, when it's time to show and it's time to shine, it's a lot harder than me talking right now. So after this possible first half, first weekly half trade from Tuesday high to Wednesday uh, night cycle low, We then have price on Wednesday, on the second half of Wednesday, which was the daylight time of Wednesday. Price expanded back on the upside, followed by Thursday also retracing a little bit more higher, followed by Thursday trading lower, then Friday trading higher. So you can see that price was all around the weekly open, always using the weekly open as a measure of discount and premium. If you are above it, after an eye being taken, then we were below it. And after we were below it with a low taken, we were back higher with an eye taken, and so on, so on. Always going back and forth. Now I can go to the 4 hour, but I will do the top-down analysis like I usually do. I want to not make this fast, but end it as fast as possible. And I was trying to go immediately to the 4 hour chart. In the 8 hour, now the weekly candlestick is no more able to be divided. If I go back to Wednesday, now Wednesday only as for 1 a.m. to 9 a.m., which means that the half at 5 a.m. isn't seen. I'm sorry, give me 1 second. So because the daily candlestick is being divided by, and so because the 24 daily candlestick is being divided in a odd number, which is impar on Portuguese. Yeah, it's an odd number. Now we don't have the perfect division. So that's why odd, if you divide the daily, which is 24 hours by 3, it gives an odd number, and then you have to, you can't use like, you can use an even number. So on the 8 hour now, daily candlestick is divided on 3 segments of time. Mean that instead of two 12-hour candlesticks, we have 3 8-hour candlesticks, with the first 8-hour candlestick, the second hour candlestick, and then the third hour candlestick. We can also see that the third 8-hour candlestick, the low of it, is very close to the second 12-hour low that I mentioned on the 12-hour chart. On this case right here, we can see that it's very close to being this low. And on the 4 hours, it's this fair value gap. So not putting myself and getting over myself, we can say we have price consolidated inside of these candlesticks. And then on the second 8-hour candlestick of Tuesday, which is between 1 a.m. and 9, so it englobes, it has the London Open. It also has a little bit of no time trading man, which is that I'm between like 5 to 7, where you shouldn't be trading. And then we have the New York Open between 7:30 and 11 or 10, I'm not sure. But between 1 a.m. and 9 a.m. of Tuesday, there was the eye of the week made and the eye of the day also made, where price traded above the Monday eye slash expansion ending point. So we had an expansion, retracement back to another expansion, which now created the reversal, coupled with an SMT where the expansion ending point on SMT, the Monday eye on GU, was respected and not turtle soup, was a failure swing and not a turtle soup like on EU. After this second 8-hour candlestick on Tuesday, we then have the third 8-hour candlestick on Tuesday, which is between 9 and 5 p.m. So 9 a.m. and 5 p.m. And price immediately created a failure swing and then retraced back on downside into the range low. This then followed by trading back on upside and closing the Tuesday candlestick. And I think I can make, you know, the daily ranges with the boxes just for a completeness sake. Just not to be talking with no boxes being shown. So it makes easier. It's like a visual. It's better to learn, easier to learn, and more interactive. Uh, then, like I was mentioning, we can see that we have Wednesday expanding on the first 12-hour period. So we have this expansion continuing from this reversal made on Tuesday, where then on the second half of Wednesday we had price retraced back on the upside. After this second 8-hour low being made, so between 1 and 9, there was a low created, which then created this retracement on the upside. Then on Thursday we have price another time consolidated on the first 8 hours, second 8 hours creating a range, and the third 8 hours turtle swooping the second 8-hour high and then expanding lower, making a new weekly low. Before then, the Friday retracement back on the upside, so always high, low, back higher, back lower, back higher, back to the weekly open, always revolving around the weekly open and this type of range, where above an high it wants to go lower, below the weekly open, and below a low it wants to go back higher. And even if you try to catch, imagine that this discount week into this high, you only catch 50 pips, but are those 50 pips worth it of your time? Like 30? Possibly, but I think that the easiest move of this week was trading this first half 3 candle model, if I say so, because we have Monday, Tuesday manipulation, and then expansion slash Wednesday expansion on downside into the Monday low. So range high, range low, internal range low, range high taken, then back to range low. Then this first weekly half was the best move for this week in my opinion. On the 4 hour, we can now see the daily candlesticks divided on 6, being divided by 6. So we have now 6 or 1, 2, 3. Yeah, we're being divided by 6 because 4 times 6 equals 24, meaning that we're now dividing the candlesticks one more time. So we have the 12-hour, which is dividing 24 by 2. We have the 8-hour, which is dividing the 24 by 3. We have the 6-hour candlestick chart that I do not use, but it exists. I just have to type 6-hour and it goes, which is divided 24 by 4. So the day has 4 6-hour candlesticks, mentioned as the day theory being the quarterly theory. And then we have also the 4-hour chart time frame, which is divided 24 hours of the day into 6 candlesticks, which then can be also divided, and the 4-hour works really well with the 12-hour and with the daily chart because it's like a perfect quarter in some sense. But we can see that we have it then the Monday candlestick, the expansion, the Tuesday reversal at the 1, so 1 hour for our candlestick between 1 and 5 a.m. This high was made. And then this weekly low was made also at 1 a.m. 4-hour candlestick on Wednesday. As you can see, the first daily half of Wednesday, the night cycle being the expansion slash continuation of this Tuesday reversal, and then the second half of Wednesday being this reversal after the opening. So this is the opening of the second half of the week, and also the opening of the second half of the day, which then price X reversed on the upside and then retraced using this candlestick. But the idea was, if you could catch this trade right here, this manipulation, then we could have a very high probability and profitable trade. So I think that's basically it for this week. I think I can go lower just to show the times and talk more about the candlestick and the fixed opening time of candlesticks. But I think that I will not get anything more from it, more than the study of this, more of the study that this trade that was made. Just going to show you, and I think that's all for this uh, weekly Ozok trade slash weekly reversal from this high to this low. So you can see what that even though that we had a bullish and up close candlestick, we had first the high of the week made, secondly the low of the week made, and after the low week after the second change instead of delivery, after the low of the week being made, then the price reversed and made the up close candlestick that we saw on the weekly time frame. But inside of the 3-hour candlestick, I can see that this is on the 2 a.m. 3-hour candlestick. So between 3 and 5 a.m. price made the high of the day on Tuesday, which was the high of the week for this current week 4. And the same thing right here. 2 a.m. 3-hour candlestick between 2 a.m. and 5 a.m. price made the daily low for Wednesday, which wasn't the weekly low like I mentioned, because weekly low was made on Thursday, but it was the end of this possible trade. On the hourly chart now ending this, I can see that we have, like, once again, just going to put the boxes on the correct places. Okay, once again, we have Monday expansion, Monday expanding on the upside, and that expansion, as we can see, was respected on EGU with this Tuesday failure swing, this Tuesday impossibility of reaching. So on Tuesday, price traded it into the rejection block of the expansion, as you can see, at the exact same time. So at 3 a.m., 1 hour, 4 a.m., 1 hour. So at 3 a.m., 1 hour, we had this Tuesday high of the day also on GU, but on GU price traded into the rejection block of the Monday slash expansion end, whereas on EU price traded into the Monday high, which was the expansion ending point, turtle souping it and then reversing it. So we have expansion end equal retracement start slash retracement end equals to expansion slash key expansion start, re-expansion start, re-expansion end is also equal to a possible retracement slash reversal start. In this case, it was the start of a reversal start, then another retracement, creating a failure swing, and price continue and expanded on the downside. In this case, we had differently. We had the Monday being the expansion start, expansion end equals to retracement or potential reversal start. In this case, on the GU, it was the reversal start. Tuesday, retracement, then into the rejection block, whereas we have a turtle soup on EU, and price expanded lower and lower and lower, making the low of the week, because on the EU we have a Monday high, then we had a Friday low of the week. On EU we had a Tuesday high, and then we had a Thursday low of the week. So I think that's all for the weekly candlestick. I think that I talked about most things, and yeah, that's all.